absolute bloodbath in the precious metals market, margin calls, liquidations left and right, accounts getting blown up. In today's video, really important video, we're going to focus on what can we learn from these past 2 days. What is the market telling us in order to make 2026 a really profitable and successful year in commodity investing? I'm going to give you my 3 observations that I'm having right now. We're also going to talk about the levels that I see for silver and the precious metal that I'm most interested in buying in this correction. Let's get right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hi, my name is Daniel Wilhelmi and I am the host of this channel. If you're new here to the channel, welcome. We're glad to have you here. Obviously, the reason behind it is not great. We can see the crash that we are seeing, the mini crash that we're seeing in the precious metals. Now, we see an overall correction in the commodities, not in the agriculturists. They do their own thing all the time. But industrial metals, some of them get hit harder than others, but it's not terrible. Energy is holding up very well. But the precious metals, man, there is air let out of the bubble balloon. And if you've been watching this channel, do not tell me you did not know. 2 days ago, was it 2 days ago, 3 days ago? Look up the video. I warned you to take profits in your miners. I warned you that a correction was coming. Now, I was a day early, fully admit that, right? I was about the blow off 10% in gold early, but when it comes to taking profits, it's better early than to be late. So don't say you didn't know this was coming. And these are the type of information that you get here on the channel. So if you are new, if you haven't subscribed, hit the subscribe button so you don't miss warnings like this. Look at silver just breaking down. Within 1 day, we hit that, well, it should be blue now, but it's the yellow former resistance, now support zone, where also you see the brown line, that's the 20-day moving average. So we got a double support here that in the European trading is holding, as you can see. We'll see about that. This is the difficulty right now. I know you guys want to hear levels and you want to hear price points where silver is going to turn around. Nobody can give you serious, accurate price prediction at this moment, because what we're seeing right now is dumb money getting liquidated like there is no tomorrow. The banks are just putting on the squeeze, margin calls left and right, accounts getting blown up. It's brutal out there. And this is what I told you before. I sent out a video to the newsletter subscribers 2 weeks ago, I think, where I specifically told you, you gotta deleverage. When we are gold 5,000 and silver 100, this is not the time to add on leverage. This is the time to reduce your leverage. And this is the mistake that retail makes all the time, and now they're getting blown up, as you can see. So the first lesson that we need to learn is, I told you when I did my warning video 2-3 days ago, I said I've never seen anything like this before. Now, I've seen the gold price go up wildly. I've seen silver going up like a rocket, but not in this short of a time frame. And that always will lead to a correction. Nothing goes up all the time. And trust me, the Bitcoin bros and the crypto kings, they're experiencing this again now, and they have before. Nothing goes up all the time. Not the Max 7 stocks, not the AI stocks, not the cryptos, and the same goes for gold and silver. Now, why is this? Because we're talking about human behavior, and that's the same all the time, and it doesn't matter what we are talking about equities, commodities, crypto. The pattern is always the same. When things start to go up very fast, very high, people get super greedy. They missed the first chunk of the train, so they think they need to make up for it by major leverage plays, and then they get blown up. And then we get these breakdowns that we see right now in these corrections. So the first thing first, is this the end of the precious metals run? Absolutely not. Is this correction healthy? Absolutely. We knew it was coming. Did I think it would come this fast? Absolutely not. Well, when we hit 5,600 yesterday, I was like, something is coming at some point. And to be honest, I did what I told you in my warning video. I sold all my trading positions in the gold miners and the silver miners. I got out pretty good. Did I get out at the tippy top? Absolutely not. But I got out within like 10% of the top, which when you have like a bubble and prices going crazy, that's pretty good. So I'm happy with it. I made other mistakes. Obviously, nobody's perfect, but you had the warning to get out of miners because this was the signal. The miners were showing weakness and not strength compared to the gold price. So the precious metals, even though, yes, the fundamentals are different now than they were in the last small, it's not even a bull run. That wasn't even like a rally, like up move around like 2020, 2021. It's definitely different than it was in the last commodity super cycle 20 years ago, because now we have central banks buying. We have an open currency war about the US dollar, and the US dollar being the number one currency in the world. Yes, we have the 60-20-20 portfolio. All these factors are different. That is true. But human behavior doesn't change. And that's what you need to keep in mind. So this is not the end of the bull run for the commodities. This is not the end of the precious metals runs, but we are in for very volatile times, which I've told you before. That's what we're going to get in 2026. It's not going to be an easy year. It's going to be a very profitable year if we stay disciplined and be smart. So that means no leverage when prices go parabolic. You take the leverage out. You sell. You are the smart money. You sell through the dump money. The mining stocks, gold, silver miners, clearly are topping. I think we're going to get a brutal day today in the mining stocks. I don't mind this because I'm going to hold my long-term holdings because I believe gold and silver are going to go up. I believe I'm holding quality companies that will profit from that. So I'm okay taking a temporary hit. I'm okay with this because I sold my trading positions. So I'm liquid now. I can use this to my advantage. Before I get into silver and where I think silver could go, even though it's impossible to predict with all these liquidations right now, let's look at two very important other factors right now from what we learned in the past days. And that is uranium stocks, lithium stocks, war materials. If the market goes down, these stocks are going to go down hard. Now, interestingly enough, the uranium stocks have held up pretty well. The sell-off wasn't as bad as I anticipated it to be, yet. That can change. Lithium stocks got crushed. War material stocks got crushed. That is absolutely normal in a correction. I've told you this before. Uranium stocks, lithium stocks, war material stocks, the majority of them, smaller stocks, small caps, micro caps sometimes, not very many blue chips, primarily retail driven. The market crashes, retail panics, they sell off, which will be a great buying opportunity for us. So this is the first thing we need to keep in mind. The correction will be a great buying opportunity for us in good companies that still have the Made in America thesis that I've been talking about on this channel. If you don't know what I'm talking about, hit the subscribe button so you don't miss videos where I explain things like this, because nothing has changed on the Made in America thesis. The only thing that's changing are the stock prices, not the thesis. It's different. If we look, for example, at the Max 7 stocks, if we look at the I stocks, people are questioning if the thesis is changing. And then investing in these stocks could be a real problem. It's a different situation now than it was in 2023, 2024. We play the Made in America story here in Hot Trades of the Day as the core investment thesis, and that has not changed. That means if the stock prices change, but the thesis doesn't change, that gives us good buying opportunities. But we need to understand that these sectors are super volatile and going to get hit very hard if we get a severe correction, not only in the commodity market, but also in the stock market overall. But there's one sector that's holding up like a champion, and that is energy. And I've told you this before. I've been bullish on energy. I've been talking about buying energy stocks for a month now. If you followed my advice, you are sitting pretty, you look great. Like I made it through the past days so far pretty good. Look at ConocoPhillips. Looks great, right? We are retesting the breakout area, the bottoming formation. We broke out yesterday. Yes, it's a red candle. Yes, we doinked off this zone right here around 105. That is completely fine. We are retesting the uptrend. If this breakout, the uptrend would be here with the 20. I'm sorry, I meant this resistance zone. I don't think we're going to go back down here. We're testing the breakout of the resistance zone. If this area of 101, if this holds and we turn back up, I am expanding my positions in ConocoPhillips. Clearly, as money is flowing into the oil stocks, one of the reasons is that oil has improved dramatically as far as the technicals are concerned. And the oil services, we're clearly not seeing the selling pressure that we see in the gold and the silver miners. And that is a very important signal for us. Look at Kinder Morgan, pipeline maker, oil services. Breakout from the sideways channel. Looks great. I'm buying the weakness because this is one of the most useful information that we got out of the past days for 2026. Oil stocks, oil service stocks showing strength compared to the stock market overall, compared to the commodity market overall, compared to the commodity stocks. So this is where the action will be in 2026. Not exclusively, obviously. You know, I'm super bullish on the lithium stocks. I'm super bullish on the uranium stocks. I love me my gold and silver miners. But one thing is for sure, once we are done with this mini crash in the precious metals, the bonanza crazy times that we saw in the mining stocks, gold and silver, they're going to be over for a while. People are going to lick their wounds. We had a lot of dumb money flowing into the mining sector that had no idea what they were doing. They were just buying whatever was recommended on YouTube or in some newsletters. And everything went up for a little while. And we know when everything goes up, that's usually the end of it for a while. Now, we are still at gold 5,000. If you were with me basically a year ago, you know I've been bullish on the miners and pounding the table here to buy the gold and silver miners last December, last January, last February, when nobody wanted them. We're here at Hot Trades of the Day, we're loading up. I'm now pounding the same way for the oil stocks and the oil services, and I was right about it, and I think we're doing really well on this. Look at Petrobras real quick. The Brazilian look, I recommended to getting in on Petrobras and looking at this like here at around like 12, 20. We rode this baby up all the way to close to $16. We're coming back down now, which I love because I want to buy more, right? But I'm not buying into this crazy run that we saw. Now, this is a short squeeze in Brazil that was triggering it, plus the oil price going up, plus nobody being invested in Petrobras, blah, blah, blah. What I'm saying is, don't stick your head in the sand. The worst thing you can do right now, well, the worst thing you can do is still have leverage or add on leverage, right? The second worst thing you can do is turning your back and saying, the commodity super boom, it's all a fake, it's not happening, and not investing in the miners. We knew these corrections were coming. I was telling you I expected 10% correction in the stock market numerous times, and the same goes for the commodities, gold, silver, after the run up, and we already have them. The first one is already here. So if gold and silver correct 10%, then the miners are correcting 20% minimum. But we love this because we gonna load up when the dumb money is selling. When I was in Zurich in April at this fairly exclusive gold conference, well, how exclusive can it be if I'm there? But it was institutional money only, invite only, that type of thing. And the interest was higher, but it wasn't crazy. And I told you after reporting back from that conference here for our channel, I told you that these gold producers, they are making bank at gold prices of 3,500. Now we're at 5,000. Even if we would go down another 20% to 4,000, man, the gold producer is going to make so much money. So obviously, I want to buy the mining stocks in the correction because the thesis hasn't changed. It's the same thesis. It's actually better now. Because if I would have told you beginning of last year, when gold was around 2,700, 2,800, hey, 2026 January, 1 year later, we're going to be at 4,000 gold, you would be like, hold on, let me sell my firstborn baby to get some money to buy gold miners. So don't get freaked out, but know what you're doing. Now, let's finish this out real quick because we're getting long, but this is important to understand. Silver, where do I think, here we go, this chart, we can go. So I already said we got good double support here at this support zone plus the 20. I can see us testing the uptrend, but really the interesting one is the purple 50-day. And that would probably mean prices around $80. Now that sounds crazy, but that's $20 from where we are right now. As you can see, silver can do this in like a day or two. And the reason why I think this is important to understand is the 50-day, and let me take off the 20 to make this more obvious, has been the big supporting moving average, as you can see, through this whole uptrend on silver. And we constantly retested it. Even if we went away from it, like here, we came back and tested it, right? So you can see here is where things start to get interesting and we're getting the up moves. And from there on, the 50 was always the big support zone, right? Here we went away from the 50 a lot, came back to it, didn't quite hit it, but we got close. So what does that tell me? We're super far away at prices of 110. Yeah, we could get back down to the 50. That is probably a zone where I would get interested in getting in on silver. And last but not least, I told you the commodity that I am eyeing, the precious metal that I want to buy on weakness, and that's platinum. Now crazy in today's crazy sell-off, because you got to remember the platinum market is very small, very tight. So we get liquidations there. You get these big candles. You saw another one at the end of 2025. Things get wild in the platinum market. That's why you cannot operate with high leverage there. You look great when on the way up, but it's going to blow up your account if you don't take profits. Today, we actually hit my buy target zone that I gave out in January. Wild. Took a while, but now we hit it. And look how much healthier platinum looks. Look how much closer the 50-day moving average is compared to silver. So this is a metal that I'm very interested in. I'm going to do a special video on platinum for our newsletter, which, by the way, is free to subscribe. You can just subscribe by going to bullmarketlifestyle.com or clicking on the link in the comments. We're not going to spam you. You're just going to get free content that we're not going to put out on the YouTube channel, like this video that's coming in the coming weeks, why I am specifically bullish on platinum, even more so than on gold and silver. This is the one. If we get bigger weakness here, another sell-offs, I'm in on platinum. So that's it for today. I know it's a tough days for precious metals investors. I really hope you took my advice. You took off some chips from the gambling table. You sold some positions, and you didn't get blown up. Better days are coming, but this volatility will also be coming in 2026. We know this, so we always need to be aware of this. We need to take profits. We can't get too greedy. No leverage. Tomorrow, you're going to get a special video that I'm really looking forward to. That's very, very important, because today is the last trading day, not only of this week, but also of the month of January, which is specifically important if you know seasonality, because in the equity markets, a lot of times the way January goes, so goes the year. So in tomorrow's video, I'll analyze 4 or 5 of the bigger markets. Definitely going to do gold, copper, oil, NASDAQ. We'll see what the 5th one is. On the monthly charts, so we can see what long-term signals we're getting there. And then if you signed up for the newsletter, I'm going to do an additional video where we go into more detail, where we're going to go into the smaller commodities on the monthly to see what is there. We're going to go closer into some of the smaller cryptos besides Bitcoin, see what's there. Heads up, looks terrible. We're going to talk about the Max 7. So again, sign up for the newsletter. It's free. If you want to get these type of information, the videos are coming this weekend. Have a good Friday. It's going to be a rough day today, especially in the mining sector. But you know what? Sun is going up. We're still healthy. Life is okay. Bye-bye.